I also have Tanvee Gupta Jain from UBS Securities joining in for her take on the policy meet outcome. Tanvee, hi, welcome on board. What are your thoughts on the MPC's decision? What were the factors, according to you, which led to a status quo?
We were surprised. We were expecting a 25 basis point rate cut in line with what the consensus expectation was. And RBI kept rates on hold, which is definitely a surprise. But I guess the solace was from the fact that one, RBI or the MPC was mentioning that it could be a temporary pause. And second, they still mentioned that there is monetary space existing. So our view is that we don't see policy easing cycle over yet. There is still a space for 25 basis point easing, but then the timing is still uncertain. We still have to watch out for the budget announcement in the on the 1st of Feb. And then we will take a call whether the space is existing in the Feb policy itself or gets further delayed to next year, that is FY21. That said, the effectiveness of monetary transmission is the key right now, because even if RBI has cumulatively reduced the policy rates by 135 basis points, the actual transmission in terms of weighted average lending rate for existing borrowers is 44 basis points, but for the fresh borrowers is 44 basis points, but for the existing borrowers, it's actually up 2 basis points. So I guess more and more steps needs to be taken to ensure effective monetary transmission rather than keep cutting policy rates, because that is not really going to have any impact on the real economy or support growth likewise.
Given the commentary from the MPC today, do you anticipate another rate cut in Feb? And what are the key assumptions that, according to you, will impact the decision?
So our view actually was that we were expecting one last rate cut in the December policy, and we actually thought rates will be kept on hold, even though this call was a little cautious because inflation was running above the trend of 4%, which the RBI's medium-term target is. But we still thought that because the growth has surprised so much on the downside, 4.5% GDP growth is a very bad number. The government, the RBI might think about supporting growth and then keep rates on hold, because inflation is going to remain above 5 at least till the Feb policy, when which gets announced after the budget. So I would say very difficult to say whether the Feb policy we will be able to see a rate cut. Obviously, it's also a function of how fast we could see the seasonal rise in food inflation is taken care, whether it is pulses import, whether it is taking care of onion prices. So we need to see how fast the transmission happens in terms of being reflected in the food prices going forward. So I think I would say at this point in time, I would be more comfortable with an April rate cut call rather than a Feb rate cut call. But again, it is very much data dependent. I would like to see the budget announcements, and because as of now in our base case, we are expecting a 30 basis point breach in the central government's fiscal deficit target. But again, we need to see whether they are successful in raising the privatization proceeds, which could be completed before March of 2020, because fiscal data is all cash accounting. So that is a key assumption. So let's see how the budget turns out to be, and accordingly I think our rate cut call, whether it happens in Feb or April, but Feb as of now looks difficult looking at the inflation trajectory.
All right, Tanvee, thanks much for joining us and sharing with us your perspective on the MPC meet outcome.